Okay, thank you, Curtis, for those kind words. And I also, of course, would like to thank the Foreign Policy Association for this great honor. I'm delighted to accept it on behalf of NBIM and all my colleagues there. Now, I will say a few words about our role as a long-term investor and how that affects our work on corporate governance and social responsibility as we have as an investor. First, NBIM, Norges Bank Investment Management, of which I am the CEO, is responsible for the management of the Norwegian Oil Fund. It's a fund who reports to the Minister of Finance and thereby to the Parliament and directly to the Norwegian people. The fund is now worth more than $600 billion. So a large fund by itself, but for a small country with only 5 million people, that's more than $120,000 a person. And we have a cash flow into the fund of roughly $1 billion a week, which means that every man, woman, and child in the country puts in another $10,000 into the fund every year. Norway, of course, has been blessed to find an enormous amount of oil reserve outside the coast in the North Sea. And it's been a decision of this generation that we will not use these funds ourselves, but we will let our grandchildren and their grandchildren again get the benefit of these funds. So this means that 100% of the government's income from the oil sector is going straight into the fund. And it is, of course, enormous privilege, but also responsibility to manage this money on behalf of our grandchildren. So, we are, of course, also invested in the US. We have equities of more than $100 invested in this market. Also on the bond side, it's around $60 billion US. Now, what do you think about if you're responsible for that kind of a money for that long time horizon? Well, first of all, yes, it's long-term. And when you look at investments in a very long-term perspective, your horizon has to expand somewhat, and you have to think about other issues. And one of them is, of course, a sustainable development of the world economy. We also try to protect the value of this fund so that the next generation and the generations coming will have the same possibilities of the purchasing power of this fund as we have today. And last, of course, we're not allowed to invest in Norway, so we invest all of this fund globally. So the global landscape is of huge importance for us. So to achieve the trust of the Norwegian people, we have to be a respected, transparent, and responsible manager. Respected for being professional in the way we do business, invest, and execute. Transparent in the way we report and explain the fund's activities. But first of all, responsible in our long-term investment focus on sustainable value creation and ownership governance principles. And this latter responsibility, or responsible investment, it forms the background for our corporate long-term strategy on corporate governance activities. But secondly, and as important to us, we have to ensure that we have the legitimacy of our investments in the host countries as our global presence increases. So we are a financial investor, and all our corporate governance effort has to be seen in this context as a way to ensure the profitabilities of the companies that we invest in. It has to be clear to the companies and to the countries in which we invest that we share a common interest in long-term sustainable value creation, that we contribute equity, capital, or lend in support of the strategy, and that we are a long-term reliable and supportive investor with shared values and objectives. So what's the elements of this corporate governance efforts, the sustainable investor that we put in place? Well, the first, of course, is that we are basing all this on principles. We're investing in more than 8,000 companies around the world, and we think there are some shared principles that should be applied to all corporations. And of course, in the global world, that one predicament, that the same rules should go for all companies, is something that we really try to embrace. That means we are not exporting any Norwegian view of the world, but we're basing all our considerations on principles that we hope other investors, companies, and regulators alike will subscribe to. We support company boards and assume that they adhere to the generally accepted principle for good company governance. And as a minority shareholder, we will retain this principle-based approach and support the boards in pursuit of our mutual interest. The second element of the governance effort is that governance is also about accountability. Now, as an example, and a bit contagious maybe, we do think that the role of the chairman and the CEO should be separated, and we also think that the shareholder should have access to the so-called proxy to be able to nominate board members. The third element of the governance effort we have here is based on transparency. We expect companies to report openly on the activities as we have as investors so we can make informed choices. But this goes also on these different parameters that are relevant for us in the longer context. When we set out, we decided that we wanted to work on corporate governance on a few targeted areas to build some insight and some knowledge that we could share with the companies. The first one on this target area was children's rights. And we have been focusing on child work for several years now. Now, this is kind of an obvious area for us because we are letting these funds go to our children and grandchildren, and we do not think that it's acceptable for them that we invest in a way where we have made our money, got our returns on children's work in other countries, that we have prevented them from going to school and prevented them to be more productive than they can be in the current work they do. So our investor expectations is giving to the board as an expectation of how we expect the board to do the risk management on these areas, particularly in the supply chain that they are using. So of the 8,000 companies we are invested in, we have targeted 500 that are working in specifically dangerous areas where there are prevalent use of child labor. And we are surprised and pleased to see that some of these initiatives seems to bear fruit. So, as an example, we think there has been around 250,000 children working in the cotton seed production in India. We got the 4 major companies in this sector, Monsanto, Syngenta, DuPont, and Bayer, to sit down and create an industry initiatives to make sure that all industries in that sector adhere to the same standard, and we think this has reduced child labor significantly in this area. The last 3 years, we've also been working on chocolate production in Western Africa, and we're pleased to see that also there we have seen some industry initiatives to ensure that the child labor standards are adhered to by all companies. So, to round off, good corporate governance is about legitimacy, accountability, and transparency. 3 simple elements. You could phrase them more simple as being trusted, responsible, and open. And good corporate governance should pave the way for profitable business and safeguard the shareholders' rights and profits over the long term. And we encourage companies to take responsibility for improving social and environmental practices that may negatively impact the development and consequently long-term return on the funds. In this way, we will continue to work on corporate governance and support our companies that we're invested in with ambitious yet realistic goals. So let me conclude by thanking the Foreign Policy Association once again for this honor. And ladies and gentlemen, thank you for your attention.